Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City. You know, there's a lot of aspects to investment real estate that you have to be knowledgeable in, or you have to have someone that's trustworthy about being knowledgeable in. And, you know, insurance is one thing that I don't do. I'm not an insurance agent. But I know a lot about insurance because I've sold a lot of properties, I sell a lot of investment, and I own a lot of investment properties. So if you're thinking about investing in real estate, I want to kind of talk about what you need to think about in terms of the type of insurance policy that you should get. Now, regardless of what the rates are or anything else in coverage, what you need is professionalism and communication. This is crucial that you can get a hold of that that insurance person, and you can ask them important questions or ask their advice about what's necessary, and you can actually get a hold of them on the phone. Now, they also happen to work for usually a national company. It may be a shelter or a State Farm or an Aetna or a Farmers or whatever it happens to be, but you need a strong company behind you. So finding that right person is extremely important. And believe me, we plumb the depths of Oklahoma City for this. In fact, I have a guy right now that I think is just the best I've ever worked with in 28 years. He's friendly. He's knowledgeable beyond belief. He can communicate, and he's on point 24/7. And he has the best rates, which is always helpful. So let's talk about the rates for a second. You know, when I got into real estate in 1989, you know, it was interesting. Insurance was a lot less back in those days. A lot of things were a lot less in those days, and you would do a $100 deductible. You know, if you want to take a little risk, you do a $500 deductible. Well, those deductibles have gotten higher. They've gotten to $1,000, $1,500, $2,500. In fact, I'm going to tell you right now that probably most investors I deal with are going for the $1,500 to $2,500 deductible. There's one really good reason for it, by the way, which is you really don't want to make claims. I know that sounds strange. You know, hey, I'm paying for this insurance, I want to make claims. If you make too many claims in a short period of time, you get put into a high-risk pool, and that is a place you don't want to be because the coverage gets crappy and the prices get high. So there has to be a real reason. Now, in Oklahoma, the typical thing that happens is a hailstorm. And we've only had 2 really powerful hailstorms, to my knowledge, in the last 10 years. So you're not going to make a lot of claims. So the higher deductible is a good idea. But that's your choice in terms of what you want to do. So if you use one of those higher deductibles, you're probably talking on a $150,000 property in Oklahoma City, about $720 a year. Now, the second decision that you need to make is whether you want actual value or replacement value. Actual value is you buy the house at $150,000 and that's your coverage. If 4 years down the road you have a fire and a total loss, then that's what you get, $150,000. If it costs $175,000 to reconstruct the home, then you're out $25,000 plus your deductible. If you have replacement value, no matter what the house ascends to in value for replacement, it gets paid, and the only thing that you deal with is replacement value. All right, so your deductible is the only money out of pocket. I highly recommend that you do replacement value. It's not that much more. And if you're in a strongly appreciating market of 3%, 5%, 8%, man, that replacement value is really going to go up. And so you want to be covered. Now, the third thing for a landlord policy you need to think about is loss of income. Now, it hasn't been that often that I've had losses, but I have had investors that have had losses. There's been tornadoes every once in a while, fires. Things do happen. And so what happens if you have a serious event at your house, your tenant has to leave and go somewhere else, but yet you're paying money every month on your lender's policy. In other words, you're paying principal, interest, taxes, insurance. You can build into a landlord policy at least 6 months of income loss so that you can cover your payment. So essentially this, if you're looking for a landlord policy, number one, I think your deductible is best around $1,500 to $2,500, but that's your choice. My second recommendation, especially in a highly appreciating market, replacement value versus actual value so you don't have a lot of money out of pocket and a total loss. And third, a loss of income rider that is in that policy in case you need to make, say, 6 months of principal and interest payments to your mortgage company. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.